Hi to IPO subscribers. Welcome to eaglelive.a. Today, let us review IPO from PALUCK Technologies Limited. Here we go on IPO review. So this is the financial analysis of the company as generated by AI powered software, and this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company as a healthy company. First is health analysis, solvency. As you know, solvency ensures the sustainability of the company. Here, all the metrics are positive. So, company is fine. Solvency is strong. Sustainability is ensured. So next coming to liquidity. Liquid ensures survival of the company. Here it is 3.12. 1 as against 1.33. 1.56 as against 1. Very good. Company is a healthy company. Coming to operational efficiency, inventory turnover okay, 1.5 moderate. Receivable turnover is we expect 7 to 8. It is 4.2, and trade payable ratio more than 8. It is 3.75. It will be changing from time to time depending on the receivables and business and all. That will be changing time to time. It's not a fixed. And being the company being a good company, that is a healthy company, the corporate governance also will be very good governance. So coming to financial irregularities, that is financial frauds. No financial frauds have been identified with the software. Good. Profitability. EBITDA 24.01, EBIT is 21.18, PBT is 18.49, PAT 13.84, cash profit 16.67, EPS 9.92. EBITDA margin 22.84, very good. Net profit margin 13.18, ROC is 27.43, ROE is 30.3%, very good. So book value per share 32.73, still is good. Cash flow from operating activity plus 6.9 crore, and net cash flow for the year is minus 11.72 lakhs. So don't worry about that. Coming to market value, the market price is 48.80 cap price, and based on that, price earning ratio is 4.83. Very good. Price to book value 1.1. So valuation wise is very good. And coming to sales growth indicators, sales growth is 2.13, and EPS growth is minus 68.5 as compared to the previous year. So this is about the financial status of the company. Company is a healthy company. Now let us go on IPO review. Here is the IPO review. PALUCK Technologies Limited. PALUCK Technologies IPO. Attractive valuation, strong growth opportunity, but are the risks being underestimated? That we will discuss. PALUCK Technologies is coming with a 33 crores IPO at a price band of 46 to 48 rupees per share. The IPO is scheduled to open on 28th August 2026. So, business overview. PALUCK Technologies is a diversified engineering and infrastructure support company. Key business segments, what they do: construction equipment rental, telecom engineering services, automobile and engineering services, logistics and fleet management, and growth opportunities, infrastructure spending, RMC demand, telecom expansion, emission control requirements is equal, multiple potential growth drivers. Very good. Valuation, the big attraction. Valuation looks attractive, good valuation. So let us see what is on per price band 48. EPS is 9.92, PE is 4.82, and PB is 1.46. Very good. We don't have to go for projected article PE and PB. So key message: PE of just 4.82 and PB of 1.4 make the IPO look inexpensive on the separate numbers. That means the company management is leaving a good amount of future earnings to the investors. Good. So, however, current published IPO data using updated post-issue calculation shows a higher PE of around 6.62 to 6.95. So, investors should verify the final RHP figures before relying on 4.82 numbers. So, okay, you can go ahead. Of course, our review, the valuation is attractive, but the discount appears to compensate to investors for the company's financials, governance, and execution risks. So financial picture, Recent published figure shows revenue around 105 crores, PAT 13.8 crore. PAT growth has been strong, borrowings have declined substantially, net worth has improved. Published data indicates borrowings declined from about 40 crore in 2023 to 13.17 crore, very good, by 2026, while PAT increased from 2.1 crore to 13.84 over the same period. So, 2.1 to 23, yeah, worked very good. Positive. Strong improvement in profitability and deleveraging is equal to major positives. But revenue growth has been relatively modest, meaning investors should examine whether the sharp improvement in profits can be sustained. Key risks. So, loan repayment history, past delays, defaults in loan repayment, and related legal proceedings are a significant concern. And compliance issues, historical delays in ROC, GST, and employees-related statutory filings indicate the need for stronger compliance system. Capital intense, equipment rental and fleet operating requires continuous investment. Working capital, the business can face pressure from receivables and asset utilization. Competition, the company competes with both organized and unorganized players across multiple segments. Market sentiment, of course, we don't have to tell you. Current sentiment cautiously positive. The IPO has generated some positive gray market interest, but GMP data is inconsistent across sources. One source reported approximately 10 rupees GMP, while another is reported zero. Since GMP is unofficial and can change rapidly, it should be treated as only as a sentiment indicator, not a valuation or listing guarantee. What could drive positive sentiment? Low headline valuation, strong recent PAT growth, deleveraging, infrastructure and telecom exposure, fresh capital for expansion. What could limit sentiment? Historical loan repayment issues, compliance concern, SME IPO liquidity risk, asset heavy operations, need for sustained cash flow generation. Investor view, valuation, attractive, low PE, PB multiple provide a valuation cushion, growth, positive, infrastructure, telecom, and RMC provide long-term demand opportunities, financial quality improving, profitability and leverage have improved significantly, but sustainability needs to be monitored, governance risk caution, historical repayment and compliance issues remain important red flags, market sentiment mixed to positive. Early gray market signals are positive in some sources, but actual subscription data will only become meaningful once the issue opens on 28th. A final verdict, PALUCK Technologies IPO, attractive valuation, but this cannot be ignored. The bull case, strong profit growth, deleveraging, infrastructure exposure, low valuation. The bear case, past repayment issues, plus compliance weaknesses, plus capital intensive operations execution risk. So, closing statement, PALUCK Technologies looks attractive on valuation, but this is not a risk-free market. The key question for investors is, can the company sustain its recent profit growth and improve its financial discipline enough to justify a higher valuation? Our overall view, cautiously positive, value investors potentially attractive subject to due diligence. Conservative investors wait for stronger evidence of sustainable cash flows and improved governance. Important, this is an analytical view, not a recommendation to subscribe. As always, investment decisions should be based on your own financial goals and risk tolerance. Thank you very much for watching the video.